There's another big interest rate announcement from the Bank of Canada that is going to happen on Wednesday. Yes, December the 7th. Can't believe we're already moved into December. But in this video, we're going to be going through how some of the market believes we're going a quarter basis point, and then another portion of analysts and people think that we're going to go 50 basis points higher. So we'll discuss some of the factors behind that, and then we'll look into how does that impact a mortgage today, and we'll go through what an average price of a home is. But the big portion is I want everybody to leave down in the comments what their expectation is based on some of the factors that we highlight in this video. I'll obviously be going through what my expectation is, but I'd love to hear what your thoughts are of what the Bank of Canada is going to do in the December rate hike announcement. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. If you like content like this, we drop a new video every single Sunday. So don't forget to come check out the channel and show some support. With that being said, obviously we highlighted it at the beginning of the video. There's a camp of people that think a quarter basis point, and then there's a camp of people that think 50 basis points. So let's see this Reuters article here that put out a poll to 30 different economists. And we can see right here that 16 of the 30, well, they expect a 0.5 point raise this week, putting the overnight rate up to 4.25%, currently sitting at 3.75. Well, the other almost half, the 14 out of 30, think that it's going to be a 25 basis point move. So the market, or the economists right now, are pretty much at a 50-50 split as to what the expectation of the Bank of Canada is. Now, if you look a little bit further, the markets are actually pricing in an 80% chance of a 25 basis point move, which is kind of where I'm torn right now, based on the fact that, are we going to go a quarter? Are we going up to 4%? Are we going up to 4.25%? So obviously there's some factors and some deciding initiatives that the Bank of Canada is going to need to make in order to make this happen. Let's read a little bit further about what those could be. So we have here Anthony Grantham, a senior economist at CIBC, is saying the rise in inventory ratios and the weakness in domestic demand should be a good signpost of weak domestically driven inflationary pressures. I'll put up a chart here of shipping rates that's from China into the US or North America, and they have fallen off of a cliff. There's not as big of a demand for companies to bring in products anymore, and that's because they're sitting on so much inventory. The retail sales aren't as good as they once were in 2020 and 2021, and you can almost factor this into the fact that prices have increased so much due to inflation. So this is what Andrew's saying here. The fact that demand has fallen off the shelf, there's no need to raise the interest rates anymore. They're already working. So we'll scroll down here a little bit, and we'll see another big factor as to why the interest rate should not go as high as 50 basis points. And the big one, obviously, for the Canadian economy is housing. And we can see here investment in housing declined last quarter. And then obviously personal spending as well, which we just touched on. So a Reuters survey showed that house prices would tumble a median 17.5% from the peak. So we have this spending that is in question. We have the housing market, which is in question. And that's why all of these economists, or at least 14 out of 30, think that we should slow down on our rate hikes, and if not, hold off from the future into 2023. Now, taking that into perspective, there is a camp, and obviously the 16 out of 30, that think we should be going a 50 basis point hike, much like the previous hike that we did. And let's learn a little bit as to why they think that way. So we have here Veronica Clark, an economist with Citibank, says that the tight labor market reflected in Statistic Canada's latest job reports means the Bank of Canada will need to stay vigilant with its interest rate hikes in order to rein in inflation. Listen, there's a lot of companies that are still looking to fill positions. That labor has definitely not rejoined into the market. And what is happening? Well, these employers are starting to offer more money. They're starting to pay people more in order to fill those jobs. And when wage growth increases, well, then these people can start to pay for the inflationary items that have gone up. And this means that inflation becomes sticky. So what Veronica is saying here is because labor and wages are going to go higher, we need to nip that in the butt now rather than paying for it in the future. There's also some articles that have gone around, and I'll try and find them and put them up on the screen, that wage increase growth or wage stickiness could lead to inflation for longer. It could lead these problems to increase or at least be persistent over years. So what the Bank of Canada is doing, or at least these people in the camp of a 50 basis point hike, is let's get out ahead of this, continuing to suffocate the economy really, so that we can reset things back to essentially normal. Now, there's almost no doubt that the Bank of Canada is going to move higher. The question, 25 basis points, 50 basis points, let's break it down regardless and look at what the impact is on a mortgage for an average Canadian home, which was about $644,000 in October of 2022. Well, if a variable rate mortgage homeowner had put down 10% and had a 5-year variable at 4.75 amortized over 25 years, well, that will have increased the monthly mortgage payment to about $3,391. Well, on a 25 basis point hike, that would be $84 more a month. And then if it happens to be a 50 point basis hike based on the same parameters, well, that's $174 per month and $2,040 extra per year. So those are just some ramifications and giving you a highlight as to what is happening in the mortgage market right now. But I think the fact of the matter is my personal opinion about where the Bank of Canada heads is 50 basis points. I think they're going to mimic and mirror what they did in the previous meeting. And the reason for that is Carolyn Rogers, the Deputy Governor General, spoke last week. We did cover it in a video. So if you haven't seen it, I'll link it above, highlighting the fact that they know that there's a problem in housing and household debt. They know that there's going to be pain that is going to come. It was almost a precursor to this meeting saying, hey, we're going higher. FYI, we're letting you know that there's going to be pain. And I think that we go up to 4.25. That is my personal thoughts. Listen, if you're still here with me, let me know what you think down in the comments. Do you think we go 0, quarter, 50, 75? Let me know what your thoughts are. I'd love to hear what the general population, the general public is saying about this. But if you're still here with me, again, hit that like button. I appreciate your support. I hope you all have a great week in the markets. Happy trading.